My name is Hugh Van Steenis, and I'm absolutely delighted to host this panel on Brexit and asset management and patient capital. As I said in the bank session, if any of you were there, I want to sort of extend our thanks to Jonathan and Paul for hosting the conference today. I think it's a very important initiative and one which all three of us are absolutely thrilled to join, not just on the basis of the topic, but also our personal friendship for the two of them and what they're doing to try and roll up their sleeves and make a practical success of Brexit. I've got an absolutely fantastic panel. Helena Morrissey to my left is currently the chair of the Investment Association, but only for one more day. And next week starts as the head of personal investing and board member of Legal & General. Helena, as many of you know, has had a really pivotal role, not least in the 30% Club. And I'm thrilled to say that Schroders was the first FTSE company to publish its diversity stats in our annual report this year. And we just about got there, but we've got work to be done, but we've made a success. And I think, obviously, and Helena also started a career at Schroders. And Liz Corley, who is the non-executive vice chair of Allianz Global Investors. She was, for many years, the global CEO, also chaired the Fair and Standards, the FIC Market Standards Board, which is the successor to Fair and Effective Markets Review, and played also a very pivotal role in public policy, and in addition has published 5 novels. So lots of different perspectives which we hope to bring today. I'm going to start off with a few questions and then open it up to the floor. Maybe, Helen, if I could start with you. Overall, what's your philosophy of how we can contribute to a success of Brexit?
Well, I think there are 3 equally important starting points. I think the first is, and echoing what you've just said about how great it is to have this conference as presenting a united front, that everybody's a leaver now, and making the best of Brexit is obviously everybody's job and everyone's responsibility. So I think that's the starting point. I think we also need to make sure that we look through the right lens as we approach both the opportunities and the challenges. One of the concerns that I have is sometimes we end up being quite, for a global financial opportunity, we tend to look a bit myopically and start as if the EU was like the center of the universe. And clearly it's a very important market, but as we heard in the preceding panel and throughout the discussions this morning, that it's very important that we remember we're part of the globe and that's where our aspiration. Making a success of it is, yes, making good relationships with the EU, but also thinking more broadly. And last but not least, I think, and again, it was in the panel that you chaired earlier, Hugh, making sure that we use this opportunity to make sure that the city and the financial services generally, including asset management, of course, are entirely relevant to the rest of society. I think that one of the reasons why clearly a lot of people were surprised about last year's Leave vote was that it was a sort of rejection of the economic model and certainly of the view that was being espoused by many people who are running businesses, particularly in the financial services. So I think this is our chance now to make sure that we do recognize the fact that our economy in the UK isn't very balanced, and that we try to act as if we're a service rather than all looking after ourselves.
We'll share this one. So, good morning, everybody, and thanks for the opportunity to be here. I think I would echo a lot of what Helena said, and I don't think this is going to be a panel where you find vast disagreements, because we are very much aligned on a lot of what the priorities should be for the next 5-10 years, frankly. What I would say, though, is I think the global agenda is obviously vital. Asset management is a global business. The great thing about talent and capital and liquidity is it flows weightlessly across the world. And so, unlike some goods and services, there aren't as many physical and challenging problems. There are regulatory ones, but we have to think very clearly that this is a free-flowing economic necessity. I think we do have to think very carefully about how we engage within Europe. And there's a tremendous amount of good being done through the collaboration of United Kingdom and European member states in terms of quality of regulation, consumer protection, strengthening the banking and other systems, and we don't want to lose that. And that regulatory cooperation and meeting of minds on the values, as the Secretary of State said this morning, is very, very important. But the element I would add and build on what Helena said is about the domestic policy, though. There's no doubt at all that the role of patient capital or asset managers domestically is going to be very, very important. And if one looks at the industrial strategy that's outlined, if one looks at the vision for a more inclusive society, more inclusive capitalism, the way in which capital gets deployed, the accountability of those who are agents in that chain is going to grow. And I think that's something where we can play a new role. I think the other thing is clearly for success, and we'll talk a lot more about success, innovation, skills, and the deployment of innovative entrepreneurial capital is going to be vital. And we have a very important role to play there.
Why don't I continue on the skills theme at this point? I think I was very struck in the banks panel how some of the bankers Jess was thinking that immigration policy was probably more important than passporting. But obviously part of what led us to this injunction was immigration policy. How best do you think we can solve the problem of getting skilled talent, both homegrown and from abroad?
I think it's really important to start with a vocabulary that looks at the issue. And part of the problem we have is legacy phrases, which are blanket phrases like immigration policy. The reality is, and if you listen to all the government ministers on this topic, everybody wants Britain to be open for business. Everybody wants the UK to be a magnet for talent, for innovation, for skills, and for inward investment. So I think we have to make a distinction between talent and immigration. And I know that's very difficult to do from a policy point of view. If we don't start to think about a vocabulary for the next 5 to 10 years that embraces that, we're going to be locked into some of the challenges of the past. And so I think that's where business can work very carefully with government and with policymakers on what are the sorts of skills, what are the sorts of talents that are going to be vital. We need a future vision as opposed to what were the historic talents and skills we had. And I think if you read the CBI's paper to the government, it's full of good ideas as to how not business-led education, because we want free education which is absolutely boundless, but business's contribution to education priorities for future skills is absolutely vital. And that applies to financial services just as much as it does to other industry sectors.
Yes, I mean, I think there's a big gap, and again, it's a nomenclature is part of the problem, big gap between sort of freedom of movement, which obviously gets lots of the headlines, and then the idea that actually we're not going to let anybody in. And what we're talking about, I think, is a very pragmatic approach. And I think all the things that the present government has done in recent weeks, including the whole barista visa and so forth. I mean, if they're going to have a visa for people who, in Pret a Manger and so forth, I think they're going to make sure that the talent that industries need to not just continue as they are, but to grow and to be innovative in the future will be secure. We did a survey within the Investment Association of our members last sort of October, November time, and around 11% of current workforce for our member firms, which isn't obviously the whole industry, but represents about £5.5 trillion, are from EU 27. So obviously, and again, echoing everything that's been said in other sessions this morning, the first priority is to make sure that they feel that they can stay and that everyone feels confident about that. But I just think on this one, where there's a will, there's a way, and every sign that we have is that there will be a pragmatic, and our borders will be open for talent. We'll just know more clearly what people will be doing. The only other thing to add, I suppose, is that we'll get on to presumably the sort of fintech element and technology. And again, I think that the encouraging signs since the referendum, we've had a variety of mostly US-based, Silicon Valley-based firms, Apple, Google, Expedia, Adobe, and so forth, all reinforcing their commitment to this country through a variety of ways, either through announcing that they're going to build new headquarters or that they're going to double their space and so forth. I think Adobe said last November that Brexit did not make us blink. So we mustn't snatch defeat from the jaws of victory. We must recognize that these companies are happy to be here, that they see Britain as very much open for business and with a thriving talent pool, and play our part in making sure that we support them in that.
I mean, Helen, I think the point you make about fintech is incredibly important because all of our businesses are fundamentally underpinned by technology, and the city is the biggest purchaser of technology. So what role can patient capital play to support the hard and soft infrastructure? I mean, I'm very struck when you go to the States that Stanford feeds Palo Alto, Cambridge and Oxford and other major universities should be feeding ourselves. What can we do as patient capital holders? Maybe Liz?
Well, I think if you look at what the needs of the country are in order to be globally competitive and to stay ahead of the curve, there's going to be significant investment in infrastructure generally. So we can talk about hard infrastructure, but also digital infrastructure. And I think there are many ways in which patient capital plays a role. Obviously, in the listed sector, in the public sector, it's playing a role by making sure that that capital is deployed by the companies that have got it in the priorities that we need for the country. I think the challenge we face is how do we get more bridging capital, pre-IPO capital. I was at the FinTech conference that the Treasury sponsored a couple of weeks ago before Easter. And what was very clear there is that in terms of the startup capital, even the angel investing, we're doing much better than we were. I think the whole regional strategy development we see in this country, I think is going to be absolutely vital for that, so that we get clusters at a university town level, at a university city level, linked into more regional education and development policies. Is absolutely key. Asset managers need to play their part in that, and that means that we have to think beyond clusters that we already have in some of the major cities into those innovating areas. But where I think we still struggle is the pre-IPO capital, and that is a challenging area. And I do believe that this country's been incredibly innovative in financial services, and there are a number of ways in which we need to think about what are the right structures that are not necessarily public listed structures that enable more investment to flow into areas which need it, and where you won't be providing a daily valuation or a weekly valuation, where you're looking at ways in which that capital can be deployed in the midterm.
So perhaps taking a slightly different angle, I think one of the, but not to disagree, I'm afraid, I know we'll try and find something that we don't agree on. One of the byproducts, as it were, I think, of the referendum result was, say, people looking, it's a chance to be introspective about some of the parts of our economy that haven't been thriving, and to address that. And I've seen, alongside, obviously, the discussions within the city and within politics, more groups set up that are trying to promulgate economic justice or broader prosperity, to echo the Prime Minister's own words. One that I'm part of, actually run by the Institute of Public Policy Research, has got a very broad range of constituents, and it does include people from different parts of the country, very important part of redressing the things that aren't quite right at the moment. And the Northeast, for example, has got a big technology hub. And I think just using this moment to actually tie it, to be more joined up in our thinking, rather than just sort of say, things ticking along really well. This shock to a lot of people forces us to think and to look introspectively and think, actually, our list of things that need resolving if this country, whether or not we'd had Brexit or not, but is really going to be fit for the 21st century and beyond. I just see that very much tied up with the talent issue and about the patient capital issue that we'd had. We had John Kay's report, Professor Kay's report in, I've forgotten how many years ago now, but 5 years ago at least, where this is all about long-term equity investment, how many links there were in the chain, all the parts that people used to play. And to be honest, very little happened. We set up the Investment Forum to try and get more collective shareholder engagement, but really, everyone nodded, said how insightful it was, and no one disagreed, but very few people did anything about it. And now is our chance, I suppose, to force ourselves. You mentioned Cambridge there, and I thought I'd share. I used to be part of the Cambridge University's Endowment Fund Investment Board. One of the reasons I joined was when I asked, well, what was their time scale? They said 100 years. Now, obviously, part of me thinking, I'm not going to be around to know whether we worked out or not in terms of our thoughts. But also, it's very refreshing to have the universities actually thinking, we have the luxury, they didn't need that money, but to invest probably longer term than any of us would care to, but very patiently.
I think maybe we should proceed this a little bit further. So obviously, as you said, Professor Kay's report didn't necessarily get implemented, and Liz, you mentioned sort of development capital, particularly as a gap. What are the sort of 2 or 3 areas that you think we should really put a laser light on, or where we can contribute to the broader policy debate?
I'm going to give this back because it kind of seems like one's monologuing.
Yeah, not at all, not at all. Yeah.
I think, funnily enough, sometimes it takes time for change to ripple through, and the Investor Forum is having an effect. You can trace that right back to Professor Kay's recommendations. I think there is significantly more engagement now. I think there's been the Treasury's productivity review, where the asset management industry worked very hard on productivity. I think also now, in terms of the whole question of the Green Paper going forward, and we'll see what happens after the general election, there's a deeper conversation going on about corporate responsibilities that are beyond responsibility to shareholder, going back to the Companies Act, Section 172. What are the deeper responsibilities? You can see role model companies already starting to report on non-financial measures. They will include it in their strategy report sometimes. You can see people looking at the social development goals that have been set up and the framework around that. So funnily enough, I think sometimes, because we are impatient typically for change, we look in the short term and say nothing's happened. But I actually think there is a real shift. And I think depending on what happens in the next 6 months, we have an opportunity domestically to think about some real leadership on that. One of the things, I mean, Helen is very involved, as she mentioned. I'm involved in some work for the government, well, was the government, on advising on outcome-orientated or social impact investing, which is how can we find ways in which we can give individuals the opportunity to invest not just for financial return, but for other returns as well. And that the challenge is that everybody would like to do it. The hurdles we put in place are incredibly difficult. So we have to look at how would we remove some of those hurdles. And I think there's a huge opportunity for the UK to be an innovator in this area. Other parts of the world do some of it, Canada, parts of Europe do, but from a different social infrastructure starting point. We have a unique social infrastructure starting point and a unique economy. And I think there's a lot we can do to start saying, these are the financial innovations, whether it's in product vehicles, whether it's in training, whether it's in the way in which companies volunteer to report on non-financial measures. We can actually start to do an awful lot here that would help, I think, in terms of raising our game.
So I guess one of the things that I didn't want to get on sort of my soapbox and talk about diversity, but actually, again, I think that the UK has been at the forefront of a number of efforts to, I suppose, modernize our thinking about talent. We've touched a little bit on education, and also you've touched on the productivity action plan. Certainly, tying it all together, I think there's also, say, this chance to make sure that we deliver. A lot of times you write reports and that everyone has their say, and then a few years later you come along and you have another green paper, white paper sort of thing. Now I think we don't really have, we have the clock ticking. And I guess what I would urge everybody who's running a business or part of a business or leading a team is to be thinking, actually, what are the ingredients, what are the strengths that we have at the moment, what are the things that we're not so good at, and work on them. The city is not particularly diverse, going back to that, not just in terms of gender, but in terms of socioeconomic background. And again, I think we're seeing now people, whether it's because of the apprenticeship levy or whether there's other motivations, but people now thinking, actually, how can I make sure that I am, again, connected, that I am getting the right digital talent, that I am getting a mix of talent, not just sort of assuming that life goes on in perpetuity.
That's incredibly helpful. So I think at this point we might change gears slightly to then specifically on asset management, because I think we have to answer at least 2 exam questions around regulation. So one that the asset management industry has flourished partly through UCITS and the gold standard that we have of Europe rules, which are both in Europe but also used as global standard. One risk is a potential loss of delegation. Do you think it's a big deal, or quite frankly, is this a small issue?
I'm happy to kick off on that one. I think it is important. As we went into Brexit, I think, or to the referendum, I think everybody thought that asset management would be less at risk from change than investment banking or banking generally, because many of us have management companies set up in Luxembourg and Ireland, for example, and we effectively are delegated the portfolio management of the funds. 3/4, according to that survey that I mentioned, 3/4 of the money that the UK asset that is run out of the UK by all sorts of global firms as well, for EU27 clients are run on the basis of delegation, rather than only 1/4 directly through the passports from Mancos or management companies. So it is important. Now, the IA actually has been working, because obviously have been some talk now. The French, for example, have been making some noises about, upsetting the apple cart on this one. I think it's important to recognize that obviously, and it's come up in other discussions on trade, we're a member of the World Trade Organization, and you can't just have a discriminatory policy against the UK. Remember, the US investment managers obviously are also being delegated the authorities to manage money or to have the custody of that money. So I don't think that it's an idle threat or a non-existent threat, because there are different ways that you can go through it, whether you're looking at individual national regulators. But we are starting from a good place, and the EU would be required to show that they weren't discriminating against the UK. So it's important, but don't get fearful about headlines.
I think that's right. I think though there's a deeper point behind that. I completely endorse everything Helen has said, but we also have to think about ongoing regulatory cooperation. Ideally, for all global sectors, and financial services and asset management are global sectors, you want to see a degree of convergence on regulation. of consistency in reporting. And that's really important for prudential reasons, but also for customer protection reasons. And so the great contribution that our regulatory and policymakers have made to European policy and vice versa, we have to think of a way in which Europe as a whole, and this was something, again, the Secretary of State said this morning and Paul mentioned, how can we find win-win solutions where this particular part of the world in this time zone and region can continue to have a significant influence and say in shaping sectoral policy. And that's very difficult in a world where globalization is being challenged and questioned in terms of its purpose. But I think in financial services, it's really important. So that's a sort of micro example, a very important one, but a micro example of something which is far more important, which is how can we actually look at the technical and prudential reasons that we have to continue to cooperate. And what are the ways in which we do that? Let's not get hidebound by the past. We've got to find new ways of doing it, but for very good reason. Financial system stability, lower cost of capital and access to capital, and consumer protection. And those are three things we shouldn't throw away.
Pick up on that because I think the couple of points there. One is that obviously every nation, particularly those who are big financial service center, would echo those aspirations that we want to have a secure financial system. We want to have low cost of capital for all the companies, etc. I think the other thing is to recognize just how much at present regulation is set on a global basis. So last week I chaired actually my final meeting as chair of the Investment Association before handing over to Peter Harrison at Schroders, and we had to move the time in the meeting because Chris Cummings, our CEO of the Investment Association, was hot-footing over to Washington, D.C., where Mark Carney was chairing the Financial Stability Board. The theme of the board was all about how to globally regulate asset management. So increasingly, the EU has become a regulatory or a law taker, not necessarily a lawmaker. Now that, as Elizabeth pointed out, in a world where we now have whiffs of protectionism and question marks over globalization may be in question, but actually going back to your final closing point about what the advantages are from a more harmonized world, then we have a really big foot on that stage. As things stand, we have nothing to fear. We are respected as thinkers on a regulatory basis. And there are people from the UK, not just Mark Carney, on all these boards, and we will continue to play an important part there.
I think it's a very important play about our role in the sectoral regulation. So the other exam question is really about an implementation phase, which obviously the Secretary of State talked about this morning. On the whole, a transition arrangement seems to be a much bigger deal for the banks. And for the banks, even themselves are worried that the transition arrangement may be announced so late that it's not really effective. How important is a transition or implementation phase for the asset management community?
Well, it's certainly true that the market infrastructure providers and the banks need longer lead times. That's certainly true. So for them, the point at which you get to a no-return decision of triggering a contingency plan is probably earlier than it would be for an asset management company. We would be the customers demanding of them that we would have continuity of service. So in a way, we'd almost be forcing them to give us that assurance. So for example, our custodian banks, we need to know that we can have safe custody for our client assets, and we need to know that we have it in April 2019. So I think for us, it is definitely less. As Helena made the point, most asset managers, that have, whether they're headquartered in the UK or like my own company headquartered in Germany, we have management company structures and regulatory structures that already cross borders globally. So it would really be any impact on custody, liquidity, depth of market, availability to actually look after our clients' money and manage our clients' money that we would have to respond to. We wouldn't really be a first mover, I don't think, unless we hadn't prepared. But I think most asset managers, frankly, are in a pretty good space.
Perfect. So at this moment, I'm going to invite some questions on the floor. I'm going to ask one question, but get your questions ready. So I think we have to ask, does the election change your view at all about the challenges, or what are you hoping for from the coming election, if anything?
I think it's just too early to say. I think what we need is a period of certainty, focus, and stability, and the sooner we get that, the better.
Yeah, I think everyone's hoping for a clearer mandate for the government that comes in, because obviously it hasn't been very useful to have a lot of back and forth about every sometimes a minor point on legislation, even getting to this point. So I think what we need to do is be able to focus on the big questions after the election and not have to keep having a sort of bit of political football.
At that point, can I invite any questions from the floor? and we have I'm going to pass my roving mic, or I can repeat the questions. And also if you holler out your name and affiliation, that'd be fantastic.
Linda Chan, Mansion Center Brokers. So my exam question touches on Helen's comment about engagement with the globe. So more and more the fund management companies and the pension fund are looking to invest in high yield opportunities which might be perceived to be more high risk. What is your engagement with Africa, which is perceived to be high risk sometimes, but the returns are higher?
Well, I'm not an African expert. Are you an African expert? I can talk to some degree. Clearly, one of the things, and this conference is obviously about prosperity in the UK, but we all hope that the EU prospers as a result of whatever changes we bring, but also it's not static. But clearly the EU is, as things stand, or Europe is, the slowest growing continent in the world. And I think you made the very important point. I think we've been looking at a number of the faster growing countries anyway, but the focal point, whether we end up, and I didn't really address it properly in the philosophy point, what we can't look upon is that Brexit is just a takeaway. It has to be, what can we add as a result, whether we would have started that way or not. And I think you're right to focus on, we know there are significant opportunities. I know just from emerging market funds that African markets are included in that, but I don't know if there's anything specifically that we can do more of.
I would say, just purely coincidentally, yesterday I was at a breakfast which was focusing on, empowerment and enfranchisement of women in areas where there's been less economic inclusion. But also out of that conference came the opportunity to invest in parts of Africa. And what struck me very strongly was a lot of this was private equity or private money rather than listed company money. So I think it comes back to what vehicles are available and how are they structured in a way that enables pension funds and individuals to invest beyond our classic mutual fund or investment accounts. And some of these opportunities, particularly faster growing emerging opportunities or higher risk, are not necessarily suited to traditional vehicles. And we have to find ways in which we can access that in a customer aware way. But nevertheless, I think what I noticed very strongly was this was really privileged capital in terms of private equity, venture capital, finding opportunities. Particularly this happened to be in eastern parts of Africa very strongly.
Margaret Doyle from Deloitte. Hugh, in your earlier panel, you talked about how many Brexiteers are sort of looking for a bonfire of regulation. And there certainly is that sort of, there is a group that sort of has that aspiration, you know, some dub at Singapore and Thames. And yet when I hear this panel, it seems to be a very different vision, which is a vision of, I think, Liz, you talked about regional clusters. Helena, you talked about diversity. So I'm just kind of curious as to which vision of Brexit we think is going to win, because they're two quite different visions of the future.
So on regulation specifically, I think it's important that we don't end up lose-lose through this, that we don't end up with the tightest regulatory system, less access to one particular market that's on our doorstep, and not really having a vision of our growth and innovation opportunities. At the other end of the spectrum is this sort of burning of the regulatory sort of bonfire, and actually, I think most of us will have no desire to have a light touch regime. But what we do want to do is make sure that we have the balance between, you know, strong regulation and allowing for innovation, growth, and jobs creation. Now, the word competitiveness is a sort of tricky word for the regulators. It's not part of the FCA's mandate to have an eye to competitiveness. It is part of their mandate to protect competition law within us, so us against each other, but not to make sure the industry is competitive. And I think somehow we need to move forward from that and make sure, and it maybe doesn't require any sort of a change in their objective, but make sure that we have pragmatic approach. So I don't see us as calling, you know, we obviously have to have some form of equivalence. If you were way outside the financial services centre. If you were trying to sell toys into a market, you need to, respect the local laws, and that's what we have to do if we're going to still access the EU client base. But I think there's a way forward that is pragmatic and that isn't either end of those spectrums.
Thank you. I think the reality is that the financial services world is regulated. And ever since 2008 and the G20 announcements, there is an expectation of equivalent regulation around the world. We are a leading international financial services centre, if not the leading one. So any suggestion that we'd suddenly become a deregulated financial services centre and money would flock to us is actually wrong. There is no way in which a substantially deregulated financial centre will attract the sort of capital and the sort of companies that want to work, prove themselves to be globally successful. I think it's often underestimated how influential the United Kingdom has been in European regulatory development for financial services. So I'm not saying there aren't every now and then some rather strange rules that come out and some strange interpretations of rules. That's absolutely true. Very often what happens is that something that sounds great in the initial law gets interpreted in a way which technically is highly complex. Also, we face the reality that after the financial crisis, there was quite punitive regulation that came through, and some of that is scheduled for review. And if regulation isn't supporting free movement of capital, cost of capital, and consumer protection and liquidity, then there comes a point at which you have to say, is that regulation, should it be amended? But the idea of the UK doing a massive unilateral amendment of financial services regulation, I think, misses the point that these are global markets. We are a global player with global influence, as Helena said. And it's going to be much more around influencing the effectiveness of regulation, now that we've had a period of more calm and stability to review it, than it will be to really burn a lot of legislation.
And at the risk of time, if I just add one point, I think what we learned painfully from the crisis was a lack of diversity in the financial system. A bank-centered system was not healthy. Any ecosystem benefits from diversity. And I think a lot of the recovery in the UK, the US, and Europe has actually been market-based finance filling the gaps when banks were blocked, when the banking channel was blocked. And I think that we need to make a very strong case to governments, particularly in the Eurozone, which are probably feeling a little bit, have a nervousness about what Brexit means, that market-based finance is actually a source of stability if well-regulated and well-executed. And I think the second is, obviously there's been a tremendous amount of regulation, 98% of it positive. But when you want to look in the round at the totality of regulation, we need to think, does it work in practice? So, for instance, if the bank rules tell the banks not to lend beyond 5 years because it's jolly risky, who funds infrastructure? And what you've heard from both Liz and Helena today is the importance of funding hard and soft infrastructure. And maybe there are ways one can slight recalibrations which could help. I think we're coming to the end of the panel. Is that what I'm being told there? Well, look, I think that I found this a really fascinating panel. I think what's been really striking to me, both from Liz and Helena, was that the importance of patient capital in funding infrastructure, in supporting regional policy, and particularly development capital, and actually the importance of that, rather than just talking about regulations and Brexit. And I think it's one of the most fascinating takeaways. I think, too, is also the role that patient capital asset management can play in fueling the economic growth, but also a more fair society. So with that, thank you. Please join me in thanking Liz and Helena for a fascinating panel.